Hey friends, welcome back to the channel. My name is Sanji. In today's video, we're going to look at some key things that you need to look out for when you're picking a broker to buy your shares on the Australian Stock Exchange. Now, I put this video together because I know when you initially start investing, and I've had a few questions about this, it can feel a bit overwhelming. There's so many brokers out there. There's brokers, there's investment platforms. There are people who say they don't charge brokerage. There are other people who say they do charge brokerage. There are companies that have incredible research platforms. There are other companies that are very bare bones. There's quite a lot of variety, and I can understand it can be quite overwhelming. And as someone who has been investing for the last 10 years, I can tell you that a lot of the time it doesn't really matter because a broker's only there to do one thing, which is to help you buy and sell shares on the Australian Stock Exchange. But in this video, I want to call out a few key things that I think you should be looking for when considering a platform or a broker to use. Let me be clear though, I'm not going to be giving any actual investment advice. I won't be telling you what to use, but I'll just point out a few key things to consider. And at the end of the video, I'll tell you what I currently use and what I'll probably switch over to in the future, because the reality is I'm actually thinking of changing myself. So I've been thinking some of these things through. And if you're new to the channel, I've recently been going through a bit of a journey where I thought I'd go through some of the key steps involved in starting your investment journey in the Australian stock market. So I did a broad video and I'll put the link up. And then I've started doing slightly more detailed videos under each of the key steps involved. So I did something like 4 key steps, and then I did one on emergency funds and this video. And then in the future, I'll talk about like how to pick an ETF, how to pick an asset class, and how to maintain your holdings, things like that. So let's start with actually answering the question of what does a broker actually do? Because there are a few characters in the share market that you need to be across. So one of them is the broker, the other one is the share registry. So when it comes to brokers, what they literally will do is they'll help you buy and sell shares on your behalf on the share market. And what you do as an individual is you basically have a relationship with a broker and you send them orders, or you issue orders to them, and you say, I want you to buy $10,000 worth of BHP shares, or $10,000 worth of VAS ETFs, or $500, or whatever it is. You give them that order and they will then go out into the market and try and get that order fulfilled, because someone else out there might be willing to sell $50,000, and of that you can get $500 worth of that transaction. There's a few more complexities around it because it's obviously based on both price and volume, but that's the general idea. Is your broker sits as this intermediate person between you and the share market, because you can't directly go into the share market and grab shares out. Your broker is able to do that. And the reality is that's all they actually do. Now, some of the brokers will do other stuff around, like they'll give you access to research platforms, and they'll give you maybe slightly more live trading data rather than the 20-minute delayed data. But the key thing is they're just there to help you buy and sell shares. Now, one thing they definitely don't do, and you please just note this down on a piece of paper, because you will inevitably ask me this question at some point. Brokers do not help you set up your dividend plans. This is that thing where if you're getting dividends from the company, do you want to get paid out in cash? Do you want to set up a reinvestment plan? Where do you transfer the money? Where do they transfer the money to you? All that stuff is not done through your broker. That is done through the share registry, because that is a relationship between you and the company, which the share registry facilitates, rather than you and the share market, which the broker facilitates. So there's a key thing, and I've done a video on this topic around how to set up your dividends, and you can link that or check out that link above. But just remember and tell that to all your friends, anyone you see on the street, your share registry is where you set up your dividends, not your broker. Your broker couldn't care less. They're just there to help you buy and sell the shares. So the first thing to consider is the brokerage costs, or the transaction costs that you need to consider. Each broker has a different fee. They have a different fee structure. It can get quite a bit complicated. But the key thing to understand here is what they're doing is essentially every time you put in a buy or a sell order, they will charge you either a flat fee or a percentage of the total order value. Meaning, if it's $5,000, they might charge you 1% of that. But what they're essentially saying is, for the service of helping you buy and sell shares on the share market, they will charge you a fee. It's an important thing to understand because what it essentially shows is that for a lot of brokers, their entire business model is based on trading activity, meaning it's in their best interests that you're buying and selling, buying and selling. They don't really care what you're buying and what you're selling. They just want you to be doing something frequently because that's how they make money off you. And this is where you start to see a bit of differentiation in how different brokers will have different price points. You'll have some, they'll say they just charge you that flat fee. Others will say a percentage. Others will say you get free trades, but you got to be a little bit careful of what the reasoning behind that is because nothing's really free. So what are they actually doing with you and with your data or with your trading information? Things to consider. There is also this one other thing, and I can't get it. I don't understand how people sat in a meeting and thought this was a good idea. But there is this one particular broker I know of that charges you a fee for the amount you have invested in the share market as a whole. It's like a percentage management fee of your actual holdings. So it's not like you buy an ETF and they have like a 0.2% or a 0.3% management fee. This is a fee if you have ETFs and shares in BHP and Commonwealth Bank and all of this. They look at all of that and they say, we will charge you a percentage of the money that's just invested in the share market across all asset classes. I don't understand how they sat in a room and thought that was a good idea. Because it's just instant rip-off stuff. Like even your bank, I think most banks don't do this where they say, oh, you've got 50 grand in your account, we're going to charge you 0.1% just because you have 50 grand in your account. They might charge you something like $5 a month account management fee, which, if you make a certain amount of transactions, they'll waive all of that. I just don't understand how this particular company, I'm not going to call names, but I might throw up their logo, how they thought that was a good idea. Like people in a meeting actually said, yes, let's do this. No idea. No idea. They didn't call me. They should have done customer research with someone like me. I would have told them that's a bad idea. Now, the next thing to consider is what is the sponsorship of your shares or the chess sponsorship of your shares. Now, this is, you bear with me because I get confused myself when I say this stuff. But here the key thing is the broker you're using a chess sponsorship model or is it a custodian model? And the differences are, and I'll link you to many, many websites where you can figure this out yourself. But the difference is if it's chess sponsored, it means you are the actual owner of the shares. So you buy BHP shares, the central registry actually knows you are the owner. It's attributed to you. You get paid the dividends, you can do your voting, you get all the letters. Everybody in the world knows those are your shares. If it's a custodian model, which some of the newer share brokers or platforms out there are using, that's where when you buy shares through that platform, you're not actually buying shares. It's more you have an IOU arrangement with the broker who actually buys the shares on your behalf and then keeps it themselves, but then has a link and says, this person does actually own this. But the question that is on everyone's mind is, if that broker falls apart, the custodian broker falls apart, goes under, has a catastrophic failure in some way, what happens to your ownership in the shares? How does that get distributed out? Whereas if it's chess sponsored, if Commonwealth Bank or any of these chess sponsorship brokers go under, you still own the shares. But if some of these custodian share companies go under, who owns the shares? The other question that I would be asking, and I'm not giving advice, but the other question you should have in your head is, if you want to switch brokers, so you start off with a custodian model broker, and then you inevitably want to switch to another broker down the track. How do you execute that? How easy is it to do that? Do you have to pay fees? Do you have to sell all your shares because you don't actually own shares? You just have an IOU arrangement with a broker. How do you move your ownership of shares in something over to the other broker? So that's the key question. And I've had this in calls that I've had with people and clients is around, I don't give advice on this, but I just say, just make sure you can answer this question. Number one, if that particular investment platform goes under, what happens to your money? Number two, if you want to move your money from that platform to another platform or from that broker to another broker, how do you do it? What's involved with it? Will it initiate any kind of taxation event? These are the kind of questions you need to be asking yourself. All right, now we're getting on to the third topic, and this key topic is around what are the features you actually need. You actually need, not the ones that they throw in your face saying you should think about this, you should think about this, or what the Instagram and TikTok says you should think about this and think about that. But what are the features you actually need? Now, to think this through, let me give you a couple of examples of different types of investors in the market, okay? Figure out where you fit on this spectrum. So on one end of the spectrum, you've got the hot shots. You're this undiscovered talent, this investing god that no one has known about. And you've given everyone advice, but you've never actually invested. But you've now decided to start investing in the share market. You can see through balance sheets and income statements, and you can read the tea leaves, and you understand how the share market works end to end. And you've got access to satellite imagery, and you can see when the car parks at Coles are busy and when they're not busy, and you can use that data to predict if Coles is going to have a good year or not, all that kind of stuff. You're the top of the cream of the crop of investors. That's one category. Then on the other extreme, you've got very casual operators. You're just like, I think I should invest in the share market. I'm going to maybe invest once or twice a year. I'm just going to invest blocks of $5,000, $10,000 into the share market. I'm mainly just accumulating. I'm not looking to trade in and out. Just want to buy and hold and do all that. That's the two ends of the spectrum. And you got to figure out where you fit, because where you fit will determine, or where you consider yourself fitting, will determine the kind of features you need in your broker. Because there are some very casual operator brokers and there are some very high-end complicated brokers out there. And the one on the extreme end, the undiscovered investing god, they would want things like live trading data. They would want research reports. They'd want the ability to do options trading. They'd want the ability to do international investing. And actually, just a quick side note on international investing, because I get this question a lot, is what platforms do it. If you are considering of investing in international share markets via your broker, and this is like direct investing in the New York Stock Exchange or in London Stock Exchange or the Tokyo Stock Exchange, not via an ETF, but directly in the stock exchange. Something that I don't think enough people consider is you're actually investing across two dimensions. You're not only investing in terms of that actual company, the Tesla, or whatever company you want to buy shares in, you're also investing in a secondary dimension in terms of currency. So basically meaning if you're investing in Tesla, not only are you investing in Tesla, you're also investing in the relationship between the Australian dollar and the US dollar. And I think a few people forget that, or they don't appreciate that, and it kind of bites them in the behind down the track in an unfavorable way. Now, I did do a video on this. I'm not going to lie. I did do a video on this, link up above, where I kind of drew a nice little diagram to get you to visualize this concept. Just be wary. If you are investing internationally, you're actually investing across two dimensions, not just the company you're investing in, but also the currency you're investing across. Then for the casual investor, you're really just looking for, well, what will minimize my brokerage? I don't really need a lot of research tools because I'm just going to buy, ETFs from Vanguard. I'm just going to buy ETFs from Beta Shares. I'm just going to buy it once every few months. I don't need, options trading opportunities. I don't even need to invest internationally. I don't really care about that. I just want to invest in Australia. And if I want to invest internationally, I'll invest in ETFs that have an international facing. And I'll deal with the currency fluctuations that way as well. So that's the other thing I would just say is just think about where you fit, because don't worry too much about these. You see these tables of comparison, ticks and crosses, and it's like, oh my goodness. Do you really need to know about all these features? Do you need all these features? One feature that is actually not considered is taxation reporting. Now, this is less of a thing when you start to invest purely in ETFs, because usually all the taxation reporting is done for you through the ETF provider themselves, and they'll send you like a document and they'll say this is what you need to use to give to your accountant to fill in your tax returns. But if you're investing across multiple asset classes, so say ETFs, bonds, and individual shares, it helps if you have a broker who does do taxation reporting. And this is, CommSec, ANZ, E-Trade, all the big bank ones will do this, where at the end of the financial year, usually a couple of months later, they'll give you a report and they'll say, okay, this is like a bit of a summary of your trading activity that you can use when you do your taxation reporting. So it's quite a handy feature. You probably wouldn't consider it until you actually start investing and you have to do some tax returns with it. Again, obviously research this out and just make sure they have it. Some of the big platforms do usually have this. Some of the smaller ones, I don't think they have it. However, if you are investing just in ETFs, it's usually not that big a deal because the ETF providers themselves give you all that documentation. Sounds a bit tricky, speak to your accountant, but just something else to consider. Now, like I said, I've been investing for a few years. Where I'm sitting is my trading journey has generally been, I started with ComSec because I started in the early 2000s and there wasn't a lot of platforms available. It's like ComSec and maybe E-Trade, maybe CMC was around, but mainly ComSec. So I started with ComSec, did a bit of trading there. Then I shifted to ANZ E-Trade, mainly because I was consolidating a lot of my accounts and I just happened to have a lot of accounts in ANZ. And then I relatively recently moved across to ComSec. And the reason I actually moved back to ComSec was actually because I thought I wanted to invest more in bonds, and ANZ E-Trade didn't let you do that, didn't let you invest directly in individual bonds. And I thought I wanted to do that, and I thought I'll just shift it across, why not? It's a good platform and all of that. And I'd never actually invested in bonds individually because, first of all, liquidity is incredibly difficult on individual bonds. You're better off just investing through a bond ETF. And now, a few, years on, I'm kind of looking at it, I'm thinking ComSec's a little bit premium for what I really want to do now. And like I said, I started off in that, undiscovered trading god territory. Now I'm casually shifting over to, I just want a casual relationship with my investing, buy every once in a while, probably buy an ETF. I don't really need to do that much research. I know what I'm generally buying. I don't really need to use the platform itself to do this investment research. So that's why I think I will leave ComSec at some point in the next 6 to 12 months and probably shift towards a simpler platform that is still CHESS sponsored and has a lower trading fee. Just a reminder, if you've started your investment journey, welcome. It's awesome to have you in this journey. It's such an exciting and rewarding journey. I have done some videos on how to get started, like some broad overviews, and now I'm doing some detailed videos into different topics like emergency funds, how to pick a broker, and in the future I'll do videos on how to pick an ETF, without giving investment advice, obviously, but how to pick, things to consider, that kind of thing. So please do check out those videos in the playlists above, and also check out my newsletter below. I do a weekly newsletter on all things investing and personal finance with an Australian context, and I think you'll enjoy it. And I'll see you in the next video. Bye for now.